A surprise surge in the building sector adds to the likelihood of the Reserve Bank lifting interest rates this afternoon. Australia's new federal anti-corruption watchdog gets 44 referrals in its first 2 days. And electric vehicle makers Tesla and BYD report huge sales for the June quarter. It's Tuesday, the 4th of July, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. Happy July 4, Independence Day in the US, of course.
Very significant day, particularly for any of our US listeners, and we are, of course, a global podcast. Sean, speaking of global podcasts, we've got an international guest joining us this morning from Singapore. You're speaking with Brian Assis, Portfolio Manager at Forward Asset Management.
Sure, and we talked to Brian about how to invest in a global inflationary environment. He gives us a couple of ideas about what he likes, but more so is about what sectors and how some sectors like the real estate investment trust, the property stocks, people think of them as bad places to invest when there's an inflationary environment, but Brian has a very different take on it. So it's well worth a listen if you're interested in investing.
Yeah, sure is. It is a cracker. But the main story this morning, Sean, signs of life in the building sector, including a surprisingly strong rise in new home approvals, might just be enough to convince the Reserve Bank Board to lift interest rates this afternoon.
For months, we know rates have been rising to help reduce inflation. But now that household consumption is slowing, there are calls for the Reserve Bank to not lift interest rates. That makes every single piece of data more and more critical. Yesterday's included. According to the Bureau of Statistics, there was a strong rebound in total housing lending in May. Now, that's partly due to higher prices. People need bigger loans to buy houses because prices were rising, but it was more than that. There was growth across the board for owner-occupiers, investors, and first home buyers. And building approvals jumped a massive 21% in May, way above expectations. Mostly it was due to a huge 59% rise in apartment approvals. Actual home approvals were only 0.3% higher. This data jumps around. Apartment approvals data is certainly volatile. It seems there was a very large apartment complex approved in May, hence the surge. Notwithstanding that, still a jump in housing lending and a jump in building approvals.
All right, so we talk about signs of life in the building sector. What is the state of the building industry at the moment?
Well, certainly it's had plenty of challenges. We know that finding labour and tradies has been tough due to the tight labour market. Input costs grew substantially during COVID, and most haven't fallen back to previous levels. And then there's interest rates, of course, which isn't helping demand. Having said all that, Australia needs many more houses. According to AMP economist Diana Messina, building approvals are running around 163,000 a year, but to keep up with population growth, we need 225,000 a year. That doesn't mean they're necessarily going to be built, but you suspect over time there will be great demand for builders and tradies and people like that to build more homes. So it's not looking good right now, but I'm not so sure that the midterm prognosis isn't too bad.
All right, big question then, Sean. Do we get a rate rise this afternoon at 2:30 p.m?
Maybe. I don't know. Look, I mean, high inflation readings, particularly core inflation in May, as well as a strong labour market and signs of a broader increase in wages growth following the Fair Work Commission's minimum wage decision all point to a rise. So too, yesterday's building industry figures and probably surprisingly strong retail sales data for May, which came out last week. On the flip side, inflation is clearly moderating. The full impact of all the interest rate hikes we've had is still to hit, and household spending is slowing, no matter what the most recent retail sales figures actually say. If there isn't a rate rise today, there probably will be one next month. That seems to be the consensus view, that there will definitely be a rate rise some point in the next 5 weeks or so.
So this feels like one of those ones where people just genuinely don't know. They're not 100% sure either way. It's like a thriller. I mean, if the Reserve Bank was featuring in a movie right now, it would be marketed as a thriller.
Well, that's something I've never really thought about, to be honest. A thriller from the Reserve Bank. Maybe.
It could also be an overreach, Sean. How did local markets perform yesterday?
It was a pretty solid result for the first trading day of the new financial year. The S&P ASX 200 finished up 0.6% to 7,246 points. The top sectors were consumer discretionary and materials. Wesfarmers was among the best of the large caps, jumping 1.4%. Aristocrat, Leisure and Santos also ended up more than 1%. The gold stocks were higher. Newcrest Mining and Northern Star Resources both were up around 3%. Tech stocks weren't popular, though, and in fact, WiseTech Global fell 3.2%, the worst of the top 200 yesterday. Other tech stocks to go backwards included REA and Xero. Healthcare companies also suffered. CSL, for example, closed down, while most of the other large caps actually closed higher. A couple of corporate news stories around. Downer EDI's shares added nearly 3% after it said it had won a contract in New Zealand. Winemaker Australian Vintage surged 9% after it said it was running a strategic review over the business. And Michael, the ASX got a new company yesterday. It's called Redox. It's a chemicals and ingredients distributor. It's got about revenue of $1.3 billion, profit of about $100 million a year. Few things significant. It's much anticipated. It's the first $100 million plus raising since the middle of last year. It's the first $1 billion plus listing since the end of last year. Interesting company. It's been in the family for 58 years. The current CEO is the grandson of the founder. So a lot of anticipation. People were hoping such a big float would do well. Came onto the bourse at $2.55 a share. First trade, $2.51. 2 hours later, it was at $2.44. Not a good start for one of the most anticipated listings this year.
No, probably not quite what they were hoping. All right, what's happening in international markets?
Well, there were figures out of China yesterday showing that factory activity is rising, but not by much. In commodity markets, oil is steady, gold's a touch lower, while iron ore is also weaker, and the Aussie dollar's buying about 66.5 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Sean, in the first 2 days of operation, both of which were non-work days, Australia's new federal anti-corruption watchdog received more than 40 referrals.
It is pretty funny.
You have to laugh at this, don't you? I mean, this does feel like a scene out of Utopia or one of those.
It does a bit. So the National Anti-Corruption Commission, which officially started work on Saturday, July 1, is headed by former New South Wales Court of Appeal Judge Paul Brereton, and I reckon he's going to be busy. In his opening speech in Canberra yesterday, Brereton described the establishment of the Commission as an historic moment. He said people are no longer prepared to tolerate practices which might once have been the subject of, if not acceptance, at least acquiescence. Brereton said the Commission had received 44 referrals online and 5 telephone requests for callbacks, which will be followed up immediately. One of those referrals was from Green Senator Barbara Pocock, who referred consultancy firm PwC to the Commission following revelations staff shared confidential tax information from the Treasury Department to drum up new business. I think Judge Brereton will indeed be very busy. The first 2 days, non-working days, 44 referrals. I hope that pace doesn't keep up.
That is a big, big start. Sean, a new national anti-scam centre involving the government, law enforcement and the private sector has been launched, hoping to identify ways to disrupt investment scams and minimise scam losses.
Investment cons are responsible for about half of the $1 billion in total scam losses suffered by Australians each year. The Investment Scam Unit will operate for 6 months initially and report to the Anti-Scam Centre, launched by Assistant Treasurer Stephen Jones yesterday. It will be led by the Australian Competition and Consumer Commission and the Australian Securities and Investments Commission. It will also include representatives from the banks, telcos and digital platforms, according to a report on AAP.
Sean, you mentioned PwC before. A big day yesterday. Former PwC Chief Executive Officer Tom Seymour is among 8 veteran partners, including the ex-chairman, Chief Risk Officer and Head of Government, who were involved in the firm's tax leak scandal or helped cover it up and are being removed from their roles.
It takes a number of partners who have been forced out because of the crisis to 12. Those going or in the process of going include Mr. Seymour and 3 former members of the firm's executive. The forced exits are the result of an investigation by the company into the scandal, which of course involved PwC partners using confidential government information to help US tech giants sidestep tax laws that a PwC partner was helping the government design. The matter has triggered an Australian Federal Police inquiry and 3 other parliamentary inquiries. The AFP has not identified any individuals beyond former PwC tax partner Peter Collins as being under investigation.
Telstra has signed an agreement to become the first telco globally to offer rural broadband and voice services with Elon Musk's satellite provider Starlink.
This is a really interesting story. I reckon there's a lot more to it than what's at face value. So the expected launch date is later this year, and Telstra Chief Executive Vicky Brady yesterday said the offering will provide additional connectivity options for people and businesses where distance and terrain makes it difficult to reach with existing networks, obviously regional and remote Australia. Currently, customers wanting Starlink services need to deal with the company directly. Starlink's thought to have about 100,000 Australian customers, about 1.5 million globally. Telstra will now step into the breach, and you can get a Starlink link via Telstra. Starlink is a low Earth orbit satellite system owned by SpaceX, which of course is owned by Elon Musk. It was launched back in 2021 in Australia, at least. The thing about this, low Earth orbit satellites deliver faster speed than traditional geostationary satellites because signals have less distance to travel. So whilst this is all about regional and remote at this point in time, don't be surprised if this expands to cities and more highly dense rural areas as well.
Have you ever seen the Starlink satellites cruising over?
No. You would have. You're a big fan of space. Have you seen them?
Yes. Oh, it is truly spectacular.
Why?
Because it just looks so strange. You've seen kind of one satellite go over, but just wait till you see a line of 60 satellites going just and keeping the perfect distance, perfect pace, and this perfectly straight line just going through the sky. And it goes from one side of the sky to the other, and then it tracks across, and then it's gone.
Huh. Cool.
Anyway, that's me on Starlink. I'm a big fan. Now, finally, Sean, before we get to international news, United Malt Group has agreed to a $1.5 billion takeover from French malt giant Malteries Soufflé. Am I saying that correctly?
Is that not a spectacular name? Malteries Soufflé.
It sounds glorious.
Yeah.
And the deal sent United's share price up 9% yesterday.
So United is the world's fourth largest maltster. Another great word.
Maltster.
Maltster. Yeah, maltster. Hard to say. Anyway, United is the fourth largest maltster and a major supplier of malt ingredients to the beer, craft beer and whiskey industries. It's had a bit of a rough trot, including a profit downgrade in April this year. Basically, there weren't enough drinkers out there. Beer consumption went down and that hurt United. But that wasn't enough to dissuade Malteries Soufflé, and the United Malt Board has unanimously recommended the bid. Malteries Soufflé first approached United Malt late last year, offered $4.15. It was an indicative offer, basically got rebuffed. Eventually, they got acceptance at $5 a share. That means the board's done a pretty good job, I would say, to get the price up to that. Yesterday, United Malt closed at $4.78 a share. The difference between that $5 and $4.78 suggests that there is still some risk that the deal won't go ahead, stuff like Foreign Investment Review Board approval and things like that.
Sean, quick question for you, and it is linked, I promise. What's the best excuse you've ever heard for someone not, say, turning up to a meeting or something at work?
The best excuse for not turning... I like that. I like the excuse. I mean, a few times people have said, I don't want to go.
Oh, that's great. I mean,
because
that's very
it's just
blunt.
Brutally honest.
Yeah. Look, because we recently had an instance with our Fear and Greed colleague, Adam Lang. And the reason I mention this is because he missed a recording session for the podcast. And out of all of the reasons that he could have chosen, had another meeting, picking up the kids, the reason that he offered was, I was waiting for my souffle to cool.
He did, yes.
And if you do not believe us, we are going to share a picture of his souffle on our Instagram, Fear and Greed Podcast. Find us on Instagram and check out Adam's souffle and the reason why he missed our recording. He could have come up with anything and he went with the honest truth, so we have to applaud that. But goodness me, that it is creative and it actually looks pretty tasty.
It does look pretty tasty, but you can't applaud that. I mean, I like honesty, but come on, Adam, make up something.
Something with a little bit more business credibility.
Mm.
All right, international news time. Tesla sales jumped 10% in the second quarter as the company benefited from government incentives and price cuts that made its electric cars less expensive than comparable petrol models.
Yeah, so Tesla delivered 466,000 vehicles between April and the end of June, up from 423,000 vehicles the previous quarter. Compared with a year earlier, sales in the second quarter were up 80%, or 83% to be exact. The sales figures were better than expected and particularly impressive given that most people borrow money to buy a car and interest rates are rising. Rules that took effect this year allow buyers of Tesla vehicles to qualify for a $7,500 federal tax credit. When you throw that in with the credit, the least expensive Model 3 sedan sells for less than $33,000 in the US. That's cheaper than similar luxury sedans sold by Mercedes or BMW. That is sedans that run on petrol, and very much in line with mass market cars such as the Toyota Camry and the Honda Accord. Always been the holy grail is to get EV car prices to the same as petrol car prices, and they've done it. Meanwhile, in China, BYD sold more than 700,000 new energy vehicles, is the measurement. In the June quarter, about half of those were fully electric, the rest hybrids. It was a record for the company. That company, of course, is China's biggest selling car brand.
Sean, Apple is cutting production targets for its Vision Pro because manufacturers are struggling with the novel gadget's complex design, according to a report in the Financial Times.
Yeah, a certain irony in this, given that Vision Pro is the most recent reason why Apple's share price has pushed beyond $3 trillion. Apple is now preparing to make fewer than 400,000 units of the $3,499 headset. That's scheduled for 2024, according to the Financial Times. Previous reports said it was planning to make about 1 million sets. Also, plans for a cheaper version have been pushed back. The Vision Pro, which was unveiled last month, is Apple's latest effort to sustain sales momentum. The device resembles high-tech ski goggles and will have its own operating system, which I think is quite remarkable, and a dedicated app store. It's expected to arrive early next year in the US, followed by other regions later.
And finally, Sean, the riots in France continue, with hundreds of public buildings across the country having been ransacked.
President Emmanuel Macron was due to meet 220 French mayors overnight to discuss the situation in their regions. About 45,000 police remain on duty trying to quell any violence that erupts. The violence was sparked by the police shooting of a 17-year-old boy a week ago. The boy's grandmother yesterday came out, appealed for calm, and said rioters were using her grandson's death as a pretext. Some of the most violent clashes have happened in the port city of Marseille, which Macron visited last week to pledge help for community projects. There have been more than 2,000 arrests so far.
Okay, up next is the Fear and Greed Daily interview with Brian Arcese, portfolio manager at Forward Asset Management.
All about the sectors to invest in an inflationary environment. Very, very good interview if you're an investor.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 4th of July, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, Facebook, and Instagram, where you can check out Adam Souffle. I'm Michael Thompson, and that was Fear and Greed. Have a great day.